Hey traders, Raghee here, and in this free video we're going to cover the S&P and the NASDAQ, two setups from this morning, and a very classic breach retreat setup, probably one of my bread and butter setups of the three that I like to see. My favorite being a V-score setup, but let's talk about one that anybody could put to use. I mean, you can do this on Monday, and all it needs is for you to look at the clock, measure some highs and lows, and a Fibonacci retracement. And what we did today was wait for the market to breach. We have an automated tool we give to members to let them know, hey, it's breached, but what it is, it's taking out the 30-minute high. Once that happened, we're waiting for a retreat. Now, this is where it's a little tricky, but this is something you can learn from here, a little inside baseball, but it's really understanding historical volatility. Now, if you caught yesterday's free video, I talked about historical volatility in a different context. Daily price movement range in the context of the daily time frame, but hourly price movement range within the context of my 1-minute day trading time frame. And in this case, one of the reasons we had a higher expectation of the market starting to bottom out was the fact that the typical price movement range was about 3.5 points shy its normal, which means the lower low that we could have seen below the clearing range low was another 3.5 points lower. So rather than shift to a short, which we never took today, what we were able to do is look for the long position inside the clearing range and at the bottom of the zone, even beyond the clearing range. And that's exactly what we did. And you can see here the path of least resistance. Even though there was some nice shorts earlier in the morning, you know, the trade that really just continued to pay dividends was the long side, especially if you had the patience to wait for moderate to conservative entries. And the S&P wasn't the only place we did this. The same setup occurred on the NAS, and actually in an easier way. The NAS, even though it too was was far less than the normal price movement range, we had our aggro and moderate levels. Now, in this case, my conservative level never got hit. But again, even though this was a nice short for some folks, and that's great, what we did is we waited as we normally do for the bottom of the range, and we looked for the market to move higher. And, you can see that it didn't trend up as nicely as the S&P. However, all we need the market to do typically is make it back up to either the clearing range high or and today we used a value area high. So if you're looking for targets and you want to, in many ways, sort of automate them, or at least automate the analysis as much as possible, think about these fixed levels like clearing ranges, or think about these volume levels that are easy enough to identify. You can use indicators, like I have an automated indicator here, to say, look, this is your top end of the value, your value area high, the top end of the range, and use those. And you'll notice how often we were flirting with the point of control, which is right here, another volume derived level, how often we were flirting with the value area high. And these are really important levels for traders to have on their charts when they're managing the psychology of a 1-minute time frame. All right, gang, so that's what we did. Kept the bullish bias, looking for longs from lower. NASDAQ and S&P were the two examples. In the premium video, I'll show you the Russell setup, as well as why we did not trade the Dow today and focused instead our alerts on the NAS, the S&P, and the Dow. Have a great weekend. I'll see you in the next update.